Good morning and welcome to a new round of business conversations that concern you. It happens right here on Business Morning and it's on Channels Television. I'm Ini John Mekwa. Let's start off with the commodities market. Malaysian palm oil features firmed, lifted by higher soy oil and crude prices, but anticipation on rising supply kept the contract near a one-month low that it hit in the previous session. The benchmark palm oil for contract for FCPOC for November delivery on Bursa Malaysia derivatives exchange gained 15 ringgit to 3,930 ringgit per ton by midday. Palm slumped 6% last week after key buyer China imposed fresh COVID-19 lockdown measures in the cities of Chengdu and Shenzhen to conduct mass testing. Well, from there, we see what's going on with the oil, global oil now, not palm oil. Prices edge lower today, pairing gains from the previous session as an OPEC Plus deal to cut output by 100,000 barrels per day in October was seen as a largely symbolic move to bolster prices after the market's recent slide. Brent crude futures had fallen 49 cents to $95.25 a barrel, while U.S. West Texas Intermediate crude futures inched up from Monday to $88.94 a barrel and were $2.07 higher than Friday's close. There was no settlement on Monday, the U.S. labor holiday, as we have heard. Well, yesterday also OPEC Plus decided to reverse 100,000 barrels per day increase for September after top producer Saudi Arabia and other members voiced concern about the slump in prices since June, despite tight supply. Analysts had not expected the agreement, even after Saudi Arabia had said it wanted to shore up prices, and cuts was mostly symbolic and had limited impact on actual supply, given that OPEC Plus had been producing below production targets even before now. Now let's see what's happening in Nigeria. And members of the Independent Petroleum Marketers Association of Nigeria, that's IPMAN, have threatened to commence the picketing of 9 northern depots of the Nigerian National Petroleum Company Limited, the NNPC Limited, over alleged non-payments of their bridge claims amounting to over 50 billion naira. The Independent Petroleum Marketers Association in Suleja branch joined their northern counterparts and besieged the Suleja NNPC depot early yesterday, insisting that for the next 3 days, the depot will be under lock and key. Motorists in northern states of Nigeria could be in for another ugly experience of PUQs as all the petroleum depots in the region have been shut.
The PIF didn't pay our money. We have about 50.5 billion within. Because of that, that's why we are withdrawing our services. He started paying since when reported to this regime and stopped it at December. Up to now, he has not paid any kobo to us. With this 9 months now, he has not paid us. And we need our money. Because many of our leaders, many of our members, they are down. They are down. They don't have money to operate again. They don't have money to buy new trucks again. Because of that, we need our money.
It's a national issue. It's not peculiar to Suleja alone. But for now, this warning strike is something, it's a segment from the northern part of Nigeria that comprises of 9 depots. We have 21 depots all in all, but 9 depots now we have embarked on strike because we are most hit, because we go down south to bring this product here. So if you didn't pay us, for how long we will continue to live in our own country as if we are not citizens? As I'm talking to you now, our members are afraid because this government is about winding up. Perhaps 5 months for this administration come to an end, although I know government is continuity. If government is continuity and you are owing us this kind of huge amount of money, we are businessmen. Some of us, our members, borrowed this money from the bank. Some of these members, they borrow money from those who have the money to be in this business. If you go around our filling stations today, you see that. So majority of our members, they are out of this business. We are not going to take it again.
Staying in the oil and gas sector, we now go to our commodity segment where we'll have a conversation. Of course, one of the top conversations will be the impact of OPEC Plus deciding to cut output by 100,000 barrels per day. We have to join us for that, Mrs. Juliet Adenuga, an analyst with Financial Derivatives Company, joining us from Victoria Island. Good morning, Mrs. Adenuga. Thank you so much for your time.
Thank you, Ini. Good morning. Thank you for having me.
Good to have you. So OPEC Plus is going to cut their output by 100,000 barrels per day starting from next month. What does this mean?
The cut is not actually a surprise. When they increased by 100,000 barrels, it was intended to last just for a month throughout September. So it was just a plan in the pipeline of, their strategy to maximize, what is happening in the oil space presently. So it's not, you shouldn't take people by surprise actually, but I think that the impact it's going to have, it's going to, we know already that the Labor Day, for instance, kind of technically ushers in the fall period when the weather becomes cold and there is more need for gas and oil and all those related products. So it's going to already tighten what is, happening in the global space. I know that there was a time that Biden had to visit Saudi Arabia to try to convince OPEC Plus, the people in charge to increase output because of the problem they are having with the Russian counterparties. So it's tightening further is going to worsen the already existing challenge of scarcity in oil. But if we bring it home, if we bring it home here, I don't think it's going to make much difference because we're not meeting our quota anyhow. And the increase usually is in tens of thousands. Like in May, they increased our quota by 18,000 barrels per day. Whereas we are shortfall in hundreds of thousands of barrels per day. For Nigeria, for example, I don't think the impact will be much. But on the global scene, where so much is needed in terms of oil, so much demand out there, not meeting up the demand, it's going to worsen the already bad situation for global supply of oil.
So Russia is a member of OPEC Plus, and Russia is not in support of the cutting of production. So how do you see this playing out with the Russia scenario and the threats of some countries to win themselves off Russian oil in this case? And we have more countries like China and India, even buying even more. So how is it when we put Russia in the picture? What do we see?
We have to understand that already Russia has its own challenge because of the sanctions placed on it. And we already know that the gas line of Russia has already cut off the northern pipeline supply to Western Europe. So there's also the challenge there. They are having issues with the supply. Russia is trying to prove to the world economy that it's indispensable, the oil. Whereas at the same time, the other nations are also trying to become a bit more independent because Russia is a key player in the supply of oil. So I think that what this is going to do to the whole scene is that the attempt to win off Russia's supply might not be easy because this is still in the short term. Russia-Ukraine war started this year, and it's not something that can automatically happen. It will take a lot of time for there to be structural changes that can increase output production by other countries in order to be able to get off the Russia's supply or be able to win themselves of Russia's supply of oil. But presently, it has to be something that will be managed well so that the winter that is fast approaching won't expose people to more hardships or even lead to death because of very cold regions of the world. So I think that the Russia in the scene cannot be ignored. At the same time, their own requirements or their own conditions being too tough for other nations might actually mean some other alternatives coming up in order to survive or be able to at least survive without having to meet their own needs compulsorily.
And as you've noted, Nigeria was not even able to meet up with its quota. So even when it's reduced, it doesn't really make a difference. And yet, we have to keep paying a subsidy, and subsidy keeps increasing, with all of this. But we saw between yesterday, when this announcement was made by OPEC Plus, that the prices of oil increased, and then by this morning it was down again. Well, what is it reacting to?
The price, that oil is one of the most volatile sectors in terms of the volatility. What can affect it? Ordinary speculation, any information, any news can just trigger off changes. Even the facts and the drop you cannot be sure it will remain there. Anything can happen before the close of business today. You can also see an increase. Once there is anything playing out in the international scene or concerning any of the key players in this oil market, it can trigger off in any direction in terms of what becomes the price of oil per barrel.
And then on the other hand, we've had liquefied natural gas. It just keeps going up.
Yes, liquefied natural gas keeps going up on the backdrop of the fact that for liquefied natural gas presently too, the key players too in this particular sector of oil also have to face the demand. There are so many other energy supply also, apart from the fact that some people use thermal, some people even use nuclear for energy supply. But liquefied natural gas keep going up presently because of the shortness in supply. And for us here, for example, we also export, but our exportation, we don't export so much. But the key players can always manipulate the price or the outcome for it to affect them or to impact the benefit they get so that they can be able to maximize what is happening within the sector presently.
All right, so inflation is out next week. What does FDC see?
Okay, for inflation, we're still conducting our analysis, and in the next 24 hours, we're going to, bring out our forecast for inflation next week.
All right, but I mean, we have seen globally the food price reducing, I think for 5 months now, 5 consecutive months. But in Nigeria, have you seen it? I haven't seen it. I don't know about you.
Yes, for some few commodities, for example, tomatoes, the basket reduced by 3,000, for instance. I think it's probably because of the short dryness we experienced, because there are some commodities that the weather affects their output. For some things like tomatoes and pepper, when it's very rainy, you notice that it spoils easily and the price goes up due to shortness of the amount of supply. But for some weeks now, we've experienced some dryness, and I think it's impacted on the tomatoes. Apart from tomatoes and new yam because of harvest, most other commodities remained relatively, higher. Rice, flour, they still haven't increased. But I think with the harvest around the corner, for some other commodities, we're likely to experience an improvement in price of commodities for the Nigerian market.
Yeah, but I mean, I think that points to one of the issues or challenges we've been talking about in the agricultural sector, the lack of preservation. So things are only available and cheap when it is in season. When it's off season, then you don't find them, or they become expensive. So, I mean, this is another area of worry for Nigerians, because when we talk about food security, then we should have high-tech and consistent storage, warehousing, and preservation of these crops so that they are around all year round.
Yes, most of our commodities are seasonal. You enjoy them most during the season for us in Nigeria here. Or else, like you stated, we're able to improve on the storage system and the facilities so that we can be able to have them all year round, and it will make the prices more stable than fluctuating during the period of scarcity and reducing during the period of abundance, which is usually during the harvest.
And then we also see on your slide that external reserve is flat at about $39 billion.
Yes, the external reserve is still flat. It's just around the pressure on external reserve, with the CBN still, trying to stabilize the currency by pumping into the system. We know recently they had to put in about $265 million to be able to ease off the disaster that was about to happen in the aviation sector. And then there's that consistency of trying to, match the INE window or the INE window and also the private market by trying to maintain stability in the forex market in order for not to allow the rate to run away. I think that pressure has been what has remained consistent because they found such control or such interventions from the external reserves. And it's at a very high cost because you're selling at about 431 or 430 naira per dollar to the parallel markets that cashes out at around 700 or above. So I think that pressure hasn't waned. And consistently, the demand for dollar, there hasn't been any major source to kind of cushion the lack or the scarcity of Forex because it still continues, the demand still exceeds supply. And then there is that tendency for the price in the parallel market to keep shooting up. And then their intention to control or to bring a relief or to kind of manage the situation is what is playing out on the foreign reserve sector. And if we're not able to kind of put a particular control as a country, or maybe to be able to change or bring a kind of stability in that sector, it will not, the depletion in the foreign reserve will not end because it's from there that they fund the intervention in the forex market.
But we do have a lot of intervention by the CBN, some programs, the 100 for 100, the RT 200, to encourage people to participate and get more of this forex into the scene. I mean, are we not feeling the impact of it?
Well, it's not as if we're not feeling the impact. The challenge is that the supply has to be more for us to actually see a significant impact. The demand for dollar hasn't abated at all. Because we know that, for instance, for example, we know in the stock market what happened, and there was profit taken. And we know also that we are battling with inflation. And when we are battling with inflation, for example, foreign investors tend to want to exit. All those attritions and then demand that is consistently high. We have the issue of those exporters that need to keep, importing and needing FX. We have those going to school for travel. We have those doing PTA. We have those that are going for medical purpose and for so many other reasons that we need. And we even import as a nation. We import things like flour. We import so many things, wheat, so many things. So I think because we don't have a proper source that can bring in FX, for example, a proper commodity or something we say we are exporting and we are a major exporter, global exporter that consistently, apart from oil, and we know that in oil we have a shortfall because we're not even meeting quota. Had it been we are meeting quota, for example, we are short by 647,000 barrels per day. Had it been we're even meeting that quota, for example, it would have been a lot of relief for us. But because of the theft and vandalization happening in that sector, we are short. And that is our mainstay, our main source of Forex. Our main source of Forex income is faulty. Or else we develop and grow to a point or do something that will bring a structural change that will cause us to begin to earn more FX. The challenge might not be easily, it cannot be reached away because demand keeps going on. For example, when people went back to school, more people, because of the issue of strike, for example, more parents are determined to get their children to study outside the country. Demand for FX for school fees, I can guarantee you, might have even doubled if the figures can be shown. And then demand for dollar is increasing every day, but there is no corresponding supply. Even though we have interventions, the interventions you're talking about the $600 million gotten, it's not still enough. It's not still enough and when people are bringing in, they want to get returns. And if they don't see returns, they want to take out at the same time. And if there are so much uncertainties in the system, people will not be relaxed. They will look for other alternatives to pick what they invested or get as much as they can and exit from the system as well.
Yeah, Mrs. Juliet Adenuga, thank you so much. It's interesting how everything is connected. ASU strike is also connected to the issue of FX shortage in the country. Well, thank you for your thoughts and perspective this morning. Enjoy the rest of your day.
Thank you, Ini. Thank you for having me.
Yeah. All right, so let's take a break now. After that, we'll do digital economy. We've talked a whole lot about this. So what else do we have to talk about on digital economy? We'll find out in just a couple of minutes. This is Business Morning on Channels Television. Welcome back. You're still watching Business Morning on Channels Television. The emergence of digital lenders has widened access to credit, especially for the underbanked, financially excluded individuals, startups, and micro, small, and medium enterprises within the Nigerian consumer financial space. Notwithstanding its benefits, digital lending has been observed to currently face increasing incidents of customer defaults. And of course, customers have also been complaining of strategies that the lenders are using. Well, to help us understand and delve into this, we have Muyiwa Ayojimi, the Chief Executive Officer of Consumer Metrics. He's active in that space, and he joins us. Good morning, Muyiwa.
Good morning, Ini.
Good to have you. Good to have you in the studio.
Great, thank you.
Okay, so please help us understand first, so we know that we're on the same page. Who are the digital lenders?
Okay, so today we have digitalization being a form of innovation for lenders. So for any fintech company, for any financial institution that uses technology to lend will be considered as being in that space.
Okay, so that would mean I get some messages where people say, "Oh, you are approved for 100,000 naira loan." You know, all those kind of suggestions. That would mean people in that class.
That would mean people in that class.
Then I also get some messages where they say, "This person is a fraud. This person is." So that will also mean those messages come from such people.
It does, and primarily today, we have witnessed quite a number of lenders, but within the traditional space. You see the traditional banks as well.
That's bad debts.
That's bad debts. They are also leveraging on technology today to be able to say, let us improve our loan books, and let us also be able to widen our tax net, our income net. At Consumetrics, we keep preaching something, and that is responsible lending and borrowing, right? Within that space, today, there is an increase in number of persons that borrow funds within the digital space. Now, today, we had an informal research that we had, and primarily, we came up with the fact that for every employee within the Nigerian space, he would have borrowed between 20 to 25,000 naira, perhaps 6 times in a year. Okay? That would give you roughly an average, okay, of about maybe 4 trillion or more within that space. So there is a market. There is a credit market that is waiting, to be explored. But again, we're saying, even in exploring this credit market, there has to be a focus on having financially responsible lenders and borrowers. So if you look at that space today, you find out that the ratio of credit borrowing today in Nigeria, if you take the statistics as at December 2021, it's about 16%. We can't compare with other climes in the world. UK, you have about 160-something% and thereabout. But we're saying that within the lending and borrowing space, can these relationships be regulated? Because as it were now, we're only
Who should regulate it?
The CBN, the FCCPC, who should be on the side of consumers. I see lately that they've been doing quite a lot in that space, but much more needs to be done, okay? And very importantly, we're working on having an advisory, an advisory that would guide this platform. Because in the growing economy, businesses would always survive when they have access to loans, when they have access to credits.
Okay, so before you go on, I've always wondered, because you see it everywhere now, oh, you can get this amount of money in 24 hours. No, 24, less than 24 hours. Yeah. You don't need collateral. You talk about responsible lending, because sometimes the lenders come across as if they are too desperate, and so they let go of what they're supposed to look to. So you promise someone that you're going to give the person loan in a couple of minutes or hours, no collateral, nothing. What are the plans to get the money back?
Yeah, you're quite correct. You get that even in minutes these days, particularly from the loan sharks. And the means of recovery that they have, decided to use, which is part of what we're preaching against, is very unconventional means. So they have back-end access to customers' profiles, videos, details, and what have you, and then name-shame such persons whenever the loan goes bad, right? So in the midst of all of this, the borrower will typically be responsible. However, ab initio, at the point of loan engagements, at the point of the credit transactions, you find out that there are always hidden terms and conditions that are either never clear or terms and conditions that were never there. So it's back to the lenders. It's also a responsibility for the borrowers.
So are you saying it's because of those hidden conditions, or maybe the infused new condition? Is that why it seems that there's a lot of defaults?
Not at all. So there is a growing trend for credits. That is matched with the appetite that the lender is latching in on. Now, I haven't seen that. He says to you, you can get this quickly, and then you can pay over this period of time, but it's going to come with very high interest rates, which might seem insignificant at first, but much later on, you find out that it becomes quite astronomical if you aggregate it over a one-year period. So the whole essence of having to still look and deep dive in that space is for some framework around financial consumer governance to guide both parties. You won't take advantage of someone who didn't see your terms and conditions in full. I can say to you clearly, there are some platforms that once that message you're saying comes through to your phone, there's a limit beyond you can go. So you fill the forms, you want to look at the terms and conditions. Some you see, some you can't see. And then because you have clicked agree, that's binding on you. Whatever it is, subsequently down the line, you don't get to know.
So are you saying that the rights of consumers are being infringed upon?
Absolutely. The rights of a consumer, as enshrined adequate rights to information, transparently. There must be a trust relationship. You take the typical day-to-day transaction. A friend will borrow a friend money. Why? Because he's trustworthy. Okay, so those elements must be there. So for the consumer needs to trust that process. The consumer also needs to ensure that he can rely on the information that is being given, and that indeed, at the table where the dotted line was signed, for that credit to be obtained, all was well.
So from your perspective now, it's up to the CBN and the FCCPC. We do know that the FCCPC has been working. We've had them a couple of times on this program and other programs on channels, television. And because of the need for these funds, we cannot tell people, okay, take your time before you agree. Why don't you read through? That's also another aspect.
Yeah, and you can underemphasize the fact that that growing need, which even the traditional banks have seen lately, to also capture both the underbanked and the unbanked will be there. And in regulating that digital space, it's like dealing with someone in the air, right? But you can only see the footprints on the sands of time. Again, it is just very important that some guidelines is issued around this. For the traditional banks, it's very clear. For the financial institutions, their own codes of governance, is quite clear. But in this digital space, there's still a lot to be done.
Yeah, it's a new space. So other than what they do, sending messages, embarrassing, the borrowers and all of that, what else do they do? I shouldn't be asking you that. You're not a lawyer. I don't know you to be a lawyer.
I'm not a lawyer. I'm actually a lawyer.
to know if the consumers can actually sue them for, the damage of their image that they have done.
Okay, so maybe I say this. I'm a lawyer, actually.
Oh, great.
Legally, you shouldn't be able to lend anyone money if you're not licensed to do that. So guess what? The loan shark would avoid every opportunity not to get into any legal tussle with you. And conversely, as a borrower, you need something to tie this person to, right? So that you can't build something on nothing and expect it to stand. So in the event that you bring yourself or you submit yourself to some legal space, it might not stand, except perhaps you bring in mediation and then to say, yes, I conventionally borrowed you money, I lend you money, in that space. Otherwise, it will remain persuasive, it will remain aggressively, all forms of aggression, to get the borrower to repay. I was having a long laugh at some chat between a borrower and a lender recently. And the guy had to say, look, Amadio, I'll fire you there. So because he's losing hope that he won't be able to get it back because there was a lot of blackmail.
So these lenders don't have a sure way of getting the money back?
They actually don't.
Because for some individuals who really don't care who you tell or how much you spread the message, that's what you would do.
Absolutely. So Consumetrics is issuing an advisory soon, and is going to be able to stratify the responsible lenders and what we'll call the irresponsible lenders. Because some of these borrowers know, they go sign up to new phones, new platforms, leave minimal things within that platform, and then borrow. They themselves, there's a network, there's a community of such borrowers, who are highly responsible. Those are not the target. But it's quite important to also, as we issue advisory, we do to both the lenders and the borrowers. Yeah,
I do know that. I had a conversation on Business Morning some time ago about credit rating. That's what like places like the US, they check your credit rating to be able to get a loan. I hope we do get, I know there's a company that was working on that, but I think it hasn't blown yet.
Yeah.
They haven't been able to capture a lot of people yet. Else, before, if you want to do a mortgage, if you want to buy a car, hire purchase and all of that, you're supposed to be able to access the rating of an individual to know if the person is creditworthy or not.
Absolutely, Ini, and that's part of enshrining that framework for responsibility. We already have within the system credit bureaus. We have credit bureaus in the country that both the traditional banks have been working with. So you can't take a loan from bank A to B to C. Your credit profile will be there. and it will be visible for the next line of credits that you may want to go and take. But for us, we're going to be issuing governance ratings around the consumer space.
Okay, well, a lot of data obviously is needed, and once again, the need for data, we cannot emphasize it. Well, thank you so much, Mr. Muiwa Ayojimi, the Chief Executive Officer of Custometrics, for your perspective this morning. We would love to have Nigerians who are responsible lenders and responsible borrowers. Well, it's time for the market now. We have Anita just walking in now. If we have Mr. Yomide come close, Anita, it's your turn now. We've been having Anita is not a lender, he's not a borrower. He's just a market and a reporter, right?
Exactly.
How did the market do yesterday? I think profit taking is back.
Yes, Ini, I would say sometimes don't count your chickens before they hatch, especially when you were
And it's a fear not. Last week, we started the week on the negative, we ended on the positive, so fear not. Just keep your fingers crossed.
Yeah, and most interestingly, it's the first, it's September, so we're still very much in the first week of September. And of course, despite of the loss, it's surprising to know that we're still in positive terrain for the month.
Yeah, because last month ended positive.
Exactly. So now let me give you the bigger picture on the market. Now, this is how the market turned out at the close of Monday's, the start of the week, 0.11% decline on the all-share index, and it's back down to the 49,000 lower level. It fell below the 50,000 psychological level. So, and at the same time, the total value, in value terms, what we lost was more than 29 billion naira at the close of Monday's trading session. This is how it turns out. We're below the 27 trillion naira mark at the same level. But let's take a look at the other side of the market. Activity was actually down by 16.29% in contrast to what you had on Monday. At the same time, value was also down by 45.85%. There you have it, 1.44 billion naira, while it's on the other side, the deals was up by 16.85%. So that's how the market turned out. Now, in terms of sectoral performance, the banking sector took the highest bashing. No thanks to losses from FPN Holdings, Stanbic IBTC, as well as Zenith Bank, and a host of some other banking stocks. At the same time, WAPCO, what we call Lafarge Africa, had a dent on the industrial goods counter, so it's down by 0.35%, as well as the insurance sector, while oil and gas was unchanged. Now, to give us more insight on the market, let's talk to a stockbroker, an equity trader, Peter Abe, who's with Stanbic IBTC Stockbrokers. Thank you for joining us, Peter.
Thank you, Edith. Thank you for having me.
Yeah, we've started the month of September. Yes, last week it was a bearish start, and then at the end of the day, it was a bullish close. Now we're back again in the red. So bring us up to speed with the major movers of the market at the moment.
Thank you. Yesterday, we saw the markets shed 11 basis points. Basically, on the banking side, we saw some of the losses from that sector, and also, like you mentioned, industrial sector. When you look at it overall, the market is still quite bearish, though we had a good positive run last week, Thursday and Friday, when the months opened. But I mean, generally, we still don't feel anything has changed overall in the market. We'll continue to see that cycle where there could be bearish at some points. Then some buyers will come in to take advantage of the lower levels.
Now, if I may ask you, you're an equity trader. I would make any stock recommendation for investors, and I know that investors are still prying into our market. Don't forget, our market in the first half of the year was the fourth best performer. Do you have any stock recommendation at the moment for investors?
When you look at the various numbers we've been having overall, the fundamentals are good. The numbers are quite good in some of the names, and I think the major concern is more on the macro side than the number. So, but I mean, if you look at the banking sector, is one of the sectors that we like. We also like the industrial names, also the telco those are some of the sectors that we like. And when we drill that down, some of these names are familiar to our clients. On the telco side, we have MTN, Airtel, Industrial, have Danksem, Awapco, Blasime. So these are some of the names that we like. And we feel at this moment, though the prices could look bearish and low, but these are time to take up these stocks, and then we'll look forward into another cycle when things will pick up.
Okay, thank you for that analysis, Peter. And I hope that the market will stage a rebound at the close of today's trading session. That was Peter Abe, equity trader at Stanbic IBTC Stockbrokers. So now let me take you to another side of the market, the smaller unlisted securities market. Well, it was the same thing, what it had at the close of Friday's trading session, but for Monday, the same what you have, the same figure, what you had as a Friday is still what you had for the close of Monday's trading session. But in terms of the activity, the total volume was down by 22.37%, which is what you have there on your screen, 17,000, while the value was at 2.04 million naira, and the deals weakened to just about 5. Let's go to another side of the market. At the fixed income market, the bonds market, it traded bearish, no thanks to profit taking on the April 2023, April 2037, and some other papers, while average yield there was unchanged. But take a look at the board there. It's not too much of a pleasing picture. Now, for the central bank special bills, it was much activity. Most of it was concentrated on the 20th of November 2022 paper, which had 30 deals. Wow, take a look at it. 156 billion naira was staked on that counter. At the end of the day, 44 deals was carried out there, where the total value was at 226 billion naira. Now, for the last part of that market, for the OMO market, average yield there was flat. Average yield had contracted by 1 basis point to 11.1%. For the OMO market. So for that, we had the most concentration was on the 6th of June 2023 paper, which had 14 deals worth about 65.39 billion naira, cumulative 68.39 billion naira. And don't forget, the debt management office has opened the September FGN savings bond for investors. They opened a 2- and 3-year paper for investors to take their investment. You have quite a basket of investment for the fixed income market, as well as the equities market and the unlisted securities market. So investors have many choices to put their money where their mouth is. So, Ini, that's how the market turned out for Monday, and we're looking out for Tuesday to see how it turns out.
Sure, of course, we'll be looking forward to that. But I want to believe that most of those transactions in the fixed income and on the secondary securities,
it's
not on the primary. All right, thank you so much, Anita, for the updates on the markets. Let's take a break now. When we come back, it's a new dawn in the UK, and Juliana is who else but to fill us in on that. That's after the break. This is Business Morning on Channels Television. Welcome back. It's still Business Morning. We head straight to London now, where Juliana is, I don't know if she's still in a celebratory mood. Juliana, good morning. It's a new dawn, and the pound is happy. It's gaining this morning.
Good morning, Inni. Yes, you're right. The beleaguered pound, which has suffered dreadful lows over the past couple of weeks because of soaring inflation and risks of a recession, which has been forecast for the Bank of England. But now that we have a new Prime Minister, Mary Elizabeth Truss is the new Conservative leader, the de facto Prime Minister of this country, we have seen a boost. So yesterday, the pound ended up by about 0.7%. Still quite low, but one British pound will currently buy you $1.16. So not as bad as the lows we were seeing, which were worse than we had ever seen since the beginning of the pandemic in the UK, March 2020. I think one of the reasons why the pound was lifted is because there are reports, and I think they're pretty much confirmed now, that the newly appointed PM has already drawn up an energy plan. She had said during her statement yesterday at the Queen Elizabeth II Centre that she will resolve it within a week. Whether or not it will be resolved, only time will tell. But there certainly seems to be a significant plan in the works which could potentially abate inflation and allow households across the country to eat and heat when it gets much colder in the next couple of weeks.
Yeah, to eat and heat, Juliana. And then well, I don't know if it's good news. You tell me, state loans to be used to bring down energy bills. How's that going to work?
Well, yeah, this is all part of the same policy that Liz Truss has been working up. It's actually called the Deficit Reduction Scheme. It's been doing the rounds for a couple of weeks, so I'm not sure whether or not the newly appointed Conservative government can take credit for this. But what energy bosses have been saying, I believe it first started with the Scottish Power CEO and then the Labour leader, Sir Keir Starmer, basically saying, look, let's freeze the energy price cap. So even though Ofgem, the energy regulator, a couple of weeks ago said it would rise from what it is currently at £1,900 to £3,500, that doesn't kick in until the 1st of October. So energy bosses have said, look, if you, the British government, give us loans, you back these loans, then we can freeze the cap where it is at the £1,900. It isn't a grant, it is a loan. So unfortunately, the British public will have to pay it back. But rather than having to squeeze these payments in every month over the next few months, this can be paid back over 10 to 20 years. So that's what's on the table. The Times are reporting it. The Telegraph are reporting it. These are kind of right-leaning, conservative backing publications in the UK. So I think it is already signed and sealed. It just needs to be delivered. And I think an announcement, if it's not made tomorrow during Liz Truss's first appearance at the dispatch box in the House of Commons, perhaps it will be announced on Thursday.
A new dawn indeed, Juliana. I know more will be coming, and we trust you to be our eyes and ears as usual. We'll talk to you at 1:30.
Talk to you then.
All right, from London, we head to the crypto space now to see if the numbers are looking any better this morning, even though I doubt that. It doesn't look like the numbers are looking any better. There you see, it's still extreme fear in the market. The fear greed index, that means that investors are still afraid and not comfortable with the market. If we look at the market cap, it's a bit better than yesterday, just about 2% higher, still 900. I remember when this market used to be about $2 trillion. Wow, seems like another life. Now it's just less than $1 trillion, $994.88 billion. Between 24 hours, it's had 1.89%. 24-hour volume is 67.12. It's up 32.08. BTC dominance dropped a bit more, still within the 38% though, but dropped compared to yesterday. We see the top holds back up. Oh, okay, there you have it. Price of Bitcoin, 19,000, still stretching to hit the 20,000. Used to take 20,000 for, granted, but now it's difficult to hit it. 24-hour volume of Bitcoin is $31.72 billion. And then if we would see the price of Ethereum, and we do know something is going on around Ethereum, it's up 6.65% at 1,666.76. 24-hour volume, 16.76. We have a Lumide additional now joining us to give us a little bit of a story. We'll come to this after Lumide. Hi, Lumide. Good morning.
Yeah, good morning. Thanks for having me.
Good to have you. Well, some analysts are saying that Bitcoin will become obsolete after Ethereum merge. What do you think?
Well, I think that's very difficult, and I won't bet against that because for many reasons, Bitcoin has been the pioneer crypto asset. You need to understand that it still remains the most dominant crypto asset to date, despite the fact that we have about 18,000 crypto projects. Also, institutional investors are more excited about its anti-inflationary properties, meaning that it has a fixed supply. And that's one of the things that you can't take away from Bitcoin. It also doesn't have a central authority. There's no crypto asset that has that advantage. But, one of the utilities advantage other altcoins, particularly Ethereum, has is because it can be used for many use cases, particularly smart contracts functionality. And recent reports that suggest a merge where it will move from its proof of work model to proof of stake. It's really what is exciting people because, first of all, it means that it consumes less electricity. Secondly, it means that execution will be much more simpler. So questions are still on the air that with the safety Bitcoin brings in terms of the fact that it has not been hacked to date, would that be in play in Ethereum? But right now, the market is really betting on the merge, and that's why you're seeing Ethereum hitting that 1,600 resistance level.
So talking about the price of Bitcoin now, I mean, most of last week, I think we had it at 20,000. Now it's gone to 19. Do you see it going up or down?
Well, I'm not a market prophet, but one of the exciting things that we're seeing about the market is that, it's very difficult to bet against the era of tightening liquidity and the fact that central banks are fighting aggressively towards inflation. And that's why we've seen Bitcoin ranging between the $19,800 level to 25 for many weeks. But having said that, recent reports suggest that it's very unlikely for risky assets to enjoy that run we saw in 2021. And that's why equity markets included are suffering. But with the fact that Bitcoin is still trading around the 2017 high, tells you that we're not going to see that bad. So some investors are betting that it has bottomed out. But I'm seeing the fact that it will take a much more pro US Fed statement on risk of sentiments before we see that institutional investments coming to play again. But right now, it doesn't look like we're going to see that 2021 run with the US Fed aggressive approach.
All right, Olumide, thank you so much for sharing your thoughts with us this morning.
Thank you.
All right, just before we go top alts by market cap, we have the usuals, and it's not looking really nice. eCash is back in the red at 0.01%. XRP is up the highest. So we'll follow the market as we normally do, and we'll surely report it to you. But tomorrow, we would have fresh conversations on Business Morning, so do join us at 10 a.m. But I'll be back at 1:30 to give you updates from the world of business. That'll be during Business Incorporated. So I'll see you then. I'm Ini John Mekwa.